Well, it's the end of another eventful year for the Wall Street. While the Nifty is marginally in the red for the year, India has managed to outperform most of its peers amidst the Ukraine war, soaring inflation and monetary tightening, royal sentiment across the world. A bunch of stocks delivered double-digit and even triple-digit returns. So we look back at the year that was and preview how the new year is likely to pan out. You're watching the CNBC-TV18 Editors Roundtable. This is the last Editors Roundtable of the Samvat. So welcome me and my editors as well as our guests on board. Gentlemen, to all of you, welcome. And I think collectively our guests joining us have what, over 60 years of collective experience in the market. Sunil and Madhu?
We are very young, so you know, we like to be that way.
Actually, it's the wrong question. Collectively between them, how much wealth have they generated? I think that is the right question. Not just for themselves, but for their investors.
Any of you want to answer that?
No, I think as Anuj said, the biggest satisfaction, and I think Madhubai will echo that, is, I think over the last so many years, so many retail investors have made, 10, 20, 50, 100, 200 times in only mutual funds. And I think that whole cult towards investing in equity and creating wealth, I think that is very heartening. Otherwise, only the foreign investors were making money. Yeah. I think now it is our domestic retail investors who have been creating wealth. And I think that is...
Actually, Madhu and Sunil together ran the fund. Mutual fund which delivered 100x. I mean, you hear about stocks giving 100x. Absolutely. I think Madhu and Sunil ran a fund which delivered 100x, which was super.
It was absolutely golden time, Anuj, and I must say that when we started, when I joined, the fund size was 6 crore. Maybe when Sunil joined, maybe fund size maybe 20 crores of these funds. So the fund sizes went up from 6 crore to 6,000 crores, and NAV went up by 100 times.
And I think, there are no two people in the stock market who, when you think about stock picking, actually, not macros or, longer term, but actual stock picking, ki paisa kis mein banega? I think, I don't think,
right here, sitting with us.
Madhu and Sunil symbolize
just a thought, when I started tracking markets, both of us were stars, you were making those big returns for shareholders. Will Sachin and, Saurav come back to bat again and manage money together? Yeah. Is that a thought?
So, I think we are together always by heart.
Absolutely.
See, it's not about managing money or stock picking. See, ultimately, when you invest, you are investing to make returns. You're not investing to allocate money.
Yeah.
So this whole concept of allocate 2% there, 5% there, 10% there is only, satisfying yourselves. And maybe some investors who like good stocks to be there in the portfolio. Ultimately, why are you investing? You're investing to create returns. So I think whether you do it individually in a fund structure, I think the genesis and the whole psychology behind it is to generate returns, right?
But Madhu, how are you feeling? This Diwali is so different, right? There's so much to be grateful for. I mean, we're out of a big Ukraine war, inflation, slower growth, and COVID. How is the sentiment right now as we head into the new Samvat?
So, Sonia, I think, first of all, as you rightly said, we have so much to be grateful about. If you had asked me 1 year back that the foreigners will sell 3 lakh crore rupees of net stocks in the market, what will happen to the market? I would have betted my shirt and said market will be 13,000 Nifty, right? We are at 17,500. Yeah. India as a country, the most heartening thing is that, whenever we are now traveling, so it is not about only inquisitiveness. No, people are really feeling that they're in a way missing out something, right? And people really want to now put money in India, whether it is retail investor, the family offices, or even the foreigner. I had one of the most eventful trips, 2 trips. I went to Singapore and I went to London 15 days back. There is real serious inquiries now. Now, when will it turn into actual money putting, that we don't know. But think about India is like a 6p stock neglected for many, many years, and suddenly because the stock has started to move up, suddenly there is a lot of interest to track it.
In fact, Sunil, it's almost as if we don't need FI money anymore. I mean, this has been just remarkable, right?
I think, to some extent, I think you're right that despite all this selling, in which Madhubai said, despite the $30 billion of selling, we have held on to it. I think that shows obviously the maturity of the investors in India, and it gives the economy a lot of more stability. See, India is a capital deficient country. We have a lot of things, but for us to grow at 7.5%, 8%, we need capital generation. which is to come only from foreign investors. So if you see the last 15, 20 years of our economy, whenever the foreign inflows were very high, economies to automatically go to 7.5%, 8%. I think this time with foreign investors being less, negative, despite that we are growing at 7% because the capital formation has happened internally. But if foreign investors were to come to India, and I'm very sure they will, I think this 6.5%, 7% can easily be 8%, which will ensure that we are by far the fastest growing economy in the world. So we need them. It's not that we don't need them.
I just add, it's not a question of whether you need or not. पानी तो उधर ही जाएगा जिधर ढलान होएगा बस, right? Money will only come where there is growth and when there are returns. Undoubtedly, even at 6.5%, 7% of GDP growth rate, we are distinctively
better than
ahead of any other country in the world. And mind you, this growth has come after a humongous cleanup which we have seen in the last 7 years, including banks, including economy, including bureaucracy. So because of we had a very low base, and from there we are starting to grow now. So
Absolutely.
who knows where this momentum will take us.
In fact, we were speaking with Manish Chokhani as well yesterday, and he said that after, traveling all over the world is a gloomy place right now, especially Europe, UK, and back home in India is where you feel the animal spirits. But we'll come back to that in a bit. Let's kickstart the show. First, Nigel's going to hop across to the wall to tell us how the year was and which were the big stocks that moved. Nigel.
Sonia, first it was a happy Diwali. And I'll say that in spite of the Nifty being more or less flattish in the last year or so, because, we had a lot of challenges actually. And yet, in fact, we managed to stand the test of tide. So, a lot of things got thrown at us. Whether it was COVID, the post-COVID impact as well, particularly in China, whether it was the hawkish Fed, the Reserve Bank of India as well was hiking rates. The Russia-Ukraine war, that's what put pressure on inflation. Globally, you saw inflation prices that spiked up. Crude oil prices up by close to around 20%. All this in the, in the last year or so. And high inflation scenario, still, in fact, the Nifty managed to hold on. Well, supply side issues as well was another worry. And the FIs, as we were just discussing, well, they sold close to around $30 billion, and yet the Nifty didn't fall apart. That's telling you the kind of participation we had from the retail audience as well out here. And in the currency market, well, there was a relative outperformance out there because the rupee depreciated, yes, by around 10%, but the dollar index itself moved from around 95 all the way to around 114 or so. And if you compare India with the rest of the globe, the US markets were under pressure, the European markets as well were under pressure. They were down anything between 5 to around 20%. And even some of those, other Asian markets, they saw a lot of pressure, barring, the Latin market. The Brazilian index was a relative outperformer, and the Nifty as well was a close second, with being more or less flattish in the last 1 year or so. Within India, FMCG did very well, auto sector as well did very well, in the last 1 year. And the PSU banking names, they were something that did pretty well. IT did see some pressure points, and the small cap index as well was down. Let's run you through some of those big movers then on the Nifty itself. New entrant, you had, a couple of those names in there. But first, the losers. Some of those stocks from the IT pack, well, they were under pressure. You had Divi's Laboratory as well that was under pressure. And in fact, the commodity-related names, whether it was a BPCL in there, Tata Steel, Ultratech, all of them did see some selling. And HDFC Life, a distinct underperformer out there. But some big gainers, Adani Enterprises, well, it's made its way into the Nifty, and that's given you big returns. And just take a look at the screen. Some of those rare entities, Coal India, Power Grid, as well as NTPC, PSUs in there, that were relative outperformers. I don't remember the last time that happened. The Royal Enfield as well from the Auto Pack did pretty well. But there were some losers, and they are all up for you on the screen. Some of them seem to have lost their way. Godrej Properties, you had India Bulls Housing Finance, IEX, India Mart, some of these stocks, well, they ran away a goodish bit and then they came in for some profit taking. But let's wind this down with some of those big gainers. HAL out of nowhere, the defense play, TVS Motors as well continues to run ahead, and a couple of those PSU banking names in there as well, up and about in the last 1 year or so. But guys, it's still a happy Diwali because despite all the challenges that we had, the Nifty was still more or less flattish. Back to you guys.
Absolutely. I mean, happy Diwali. Despite the fact that the index did not do very well, but is the coming year going to be about? We've been talking about this passive style of investing, but I think will discerning stock picking come back into vogue in a big way once again? That is one, Madhu. And second, the purpose of the show is to slightly look ahead. But in the near term, in the next 1 year or so, for the first time in 10, 12 years, fixed income is starting to get very attractive, right? I mean, equities are poised interestingly, but fixed income is also, looking very interestingly poised, both globally and here. How do you think about that in terms of asset allocation? Go on.
Sure. So, Prashant, I don't want to spoil the mood.
Yeah.
It's a happy Diwali. So I've been very clear that, let's not think that the Ram Rajya is here for India and everything is hanky-dory.
Yeah.
We should not ever believe that we are completely insulated from the world. And, regardless of what happens in the world, we as a country will continue to do well. It is very heartening to see some kind of a delinking which has happened, but I am sure what is happening in the world will impact us. If there is any big geopolitical event which happens, it will impact energy prices and subsequently it will impact us. So I think we will completely not be insulated from the world. To some extent, what is happening in the world will have an impact on us. That's point number one. Point number two, to your point, I don't think, at least for me, it has ever been about looking at index.
Yeah. Both of you are absolutely equity people.
Yeah, it has never been like looking at index.
Yeah.
It has always been about stock picking.
Yeah.
I'm saying my experience is, even you got the best sector right, but if you did not choose the right company, even in the best sector, you would have actually ended up losing money or not making money.
It's happened in the financial.
Yeah, it is happening in the financial. You saw every year we see there is a sector which does well, and there are companies which do exceptionally well, and there are companies which do badly.
Discuss about various individual sectors within the mid
No,
cap.
I just finished this point.
Sure.
So it will all be about stock picking. Coming to your point about fixed return. So last 2 years was huge tailwind for equities because virtually you are not making any money in fixed income. Real estate was not moving. Gold prices were down. So every other asset class in the last 2 years did not give any return virtually. If I look at bank rates are still 5.5% 1 year. Government is borrowing at 7.5%. So it's not possible that the banks will be able to borrow cheaper than the government for a very long period of time. So if interest rates really move up by bank deposit rates by 100, 150, 200 points, there is a possibility that it will happen. It will to some extent, definitely that will become an asset class which will attract money. Having said that, all of it, Prashant, this $2 billion of SIP which we are getting every month and roughly $1.5 billion of pension fund money, I don't see a major risk to this inflow.
Okay. But Madhu, what I wanted to ask you was, you've been managing public money for the last 3 decades now. See, we saw the numbers. Nigel put out what somewhat to somewhat markets have done, Nifty has done, and everything. But in terms of sentiment, Madhu, because you talk to so many companies, you talk to so many investors as well, your investment group as well. Where you will put this current sentiment? Are we exuberant? Are we pessimistic?
Right now we are exuberant.
Exactly. That's what I
Right
want
now
to
we are
ask. Are we seeing an exuberance in the
Anyone
market
you
now?
go talk, they are very positive. Companies are actually doing well. Numbers across sectors, barring few sectors, and the companies who have lost the race, forget that. But otherwise, there is a lot of exuberance. And also
Is that a worrying sign? Is that a worrying sign for you?
No, it is not a worrying sign because it is not happening on the back of any debt.
Sure.
So it is not people are borrowing thousands of crore rupees and being exuberant. Okay. It is happening in this exuberance. One best thing which has happened is deleveraging of corporate India. So so we should not take. I don't think it is a worrying sign, but we have to see that they don't commit mistake.
Sure.
At this point of time, when your cash flows are strong, this is the time when you really make a mistake. You go and do some unrelated acquisition, or you do some major capex, and if the cycle then slightly turns cautious or negative, that is the time equity returns really go down.
Okay, so the market is in an exuberant phase, but you're not too cautious at this point in time, right? That's the way to take it.
Yeah, so I'm not cautious. I'm just saying that let us be aware.
Let's be aware that
next
this is a
3-6
euphoric
months,
situation.
It is possible that market may tend towards global.
Yeah.
It is long term. We all know that oil is heading down. But what happens if oil goes up another $20 from here?
Yeah.
So you want to weigh in on this also because of the kind of bipolar nature that we have in this market. you know, it's almost like been like K-shaped, but even within the sectors, it's clearly IT just keeps going down, banks keep going up. For how long can it continue?
So I think I partially echo what Madhu is saying, but I would not call it exuberance. That's a very, very strong word. I think market is discounting a lot of negatives. And it is still holding on, but it is not in a phase where, as Madhu said, no one is borrowing and investing. So to that extent, I would not say it's like in that bubble kind of zone. At the same time, at the same time, what you said now, that you're already starting to see now. Cycles are getting shorter.
And say, Sunil, people are positive. They are not exuberant.
Yeah.
See, exuberance is when you do mindless things. People are not yet exuberant in that sense.
Okay,
I agree with you.
So,
Go ahead. So the cycles are getting shorter. So if you see, defense, so 1 month only defense, then auto, only auto, now bank, so everything is only bank. So I think what is happening is the rotation is too fast. That means it's more trading kind of cycle which we are seeing rather than people taking a call from a 3-4 years perspective. No one is talking about defense from a 5 years perspective or auto from a 5 years perspective. And when you talk about auto, people say, yeah, Diwali ka sales bahut acha hai. Auto will do well for the next 3 months. So I think that is something which we need to keep in mind.
Okay, let's do one thing. Let's take a short commercial break. But when we come back, we'll also look at the mid and small cap winners and losers and try to get some lessons that you can learn and perhaps imbibe from this somewhat to next. Stay tuned.